The price of gold has probably peaked in this cycle. We're seeing interest rates continue to be pressured higher. The Federal Reserve is going to keep interest rates higher for longer to combat inflation. From that, the price of gold will move lower. Assets in general, gold, equities, Bitcoin, they are elevated. And when you start overlapping charts, you can see that these assets, that we're in a pseudo asset bubble. And I don't think that it's a bubble in the sense that it's overvalued as much as we are now in a turning point and these assets will move lower. Gold via GLD stock, which is an ETF against gold if you don't have access to commodities trading. This is one I like. I will often step in and buy silver, the actual physical commodity. But in this case, what I'm going to be doing is taking short positions against the price of gold, going short on GLD stock. Let me show you a few charts so you can see what I'm looking at and how I think that we're going to see the price of gold moving lower. Let's jump in. Here's a look at gold. And as you can see, it spiked up earlier all through April, geopolitical concerns. But those geopolitical concerns don't look like they're going to turn into major all-out wars. Because of that, previously spot gold had been pushed higher. At the same time, we're dealing with inflation. Inflation's not hitting the 2% target rate that the Federal Reserve is looking for. Look at the month-over-month gains in PCE price index. They are, if you looked at year over year, given the last 3 months, we're looking at a 4.5% year over year gain in price levels. That's too much. That's twice what the Federal Reserve is targeting, 2%. Federal Reserve has to leave interest rates higher for longer. Assets will move lower because of that. The major assets, of course, gold, one of them, equities, Bitcoin, and there's some other outlying factors when it comes to Bitcoin, but all assets are moving higher. Then finally, housing, but housing is skewed in so many ways as well. The cure for this is higher interest rates, and assets will be moving downward. I don't think we go beyond where we've seen the 2,400 level in spot gold. Here's a look at the weekly chart, same chart. You can see how we had some big moves all through 2024. Interestingly, we had big moves back upward with inflation in 2024. The same exact chart, SPDR, the ETF in the bar chart, versus at the SPX, the stock market, the S&P 500. So you're looking at gold versus stocks. And as you can see, generally speaking, we have seen trending higher numbers. No, it's not a one-for-one relationship, but generally speaking, assets are moving higher. This is having a pretty decent size effect on everything. Here's a look at the U.S. 10-year Treasury yield. Treasuries are starting to trend back upward. They will stay here for probably 6 months. U.S. presidential election is on November 5th, Tuesday. Then 6th and 7th, we have a meeting then. The Federal Reserve will not want to look like it's nudging the presidential election in any way, shape, or form. They're not going to lower rates. They're not going to raise rates. So what happens between now and the next 6 months? Consumers are going to be subjected to some pretty high interest rate levels. Look at the U.S. 10-year Treasury yield, not over 5%, but this is the highest it's been in years. Given that, the effects will be a slowing economy. Not necessarily into recession. GDP just printed 5.21%, 5.2 and change. Maybe we drop all the way down to, say, 2.5%, 1% GDP year over year growth rate. Slower growth rates means assets will have to move lower in relationship to higher interest rates, because a lot of those stocks, they're chasing yield. Well, that yield isn't going to be there because growth rates are slowing down. We get employment numbers this week, and they're likely to show that employment is slowing down. There's not much left gains in employment. We're at 3.8% unemployment. Who's left to all of a sudden have a catalyst event where there much more people show up on the payrolls, and that nudges the economy forward? So I don't necessarily see at this point a recession so much as we're definitely stopping growth. Stocks, gold, the price of gold, I think moves much lower. We could see the price of gold moving lower throughout the between now and towards the end of this year. And I'm starting to take a position with when it comes to GLD stock, the ETF. What I'll do is I'll sell calls and buy puts. It's called a risk reversal. I put this trade on pretty much one of my primary trades, and I do so when with the options out of the money. So I'll take the price of gold, and here we're taking a look at U.S. Treasuries versus bonds themselves, bond yields, and as you can see, they both have trended higher. With interest rates moving higher, this will have that effect. But what I'm do is I will take the price of gold and maybe about 5% out with about a month or two, I'll sell calls and bring in some premium. Then I'll buy puts on the price of gold about 5% underneath the market. I'm selling those calls, bring in some premium. I'm looking at probably 2 to 3 months out, looking for a decent move to the downside. My calls will expire worthless, my puts will go in the money, and I'll do all right on that trade. This risk reversal is something I've been using all the time. I usually use a pretty wide gap to spot to give myself a lot of ability to sleep at night, because things happen, little things that really don't have a lot of big aspects to like what's actually going to happen. You'll see little events, prices will spike up against the trade, but then turn right back around 2 days later. So I give myself that wide gap so that I can sleep at night, plain and simple. I am going to be shorting the price of gold. I think spot gold is too high with interest rates as high as they are. Interest rates will remain higher. Equities, gold, Bitcoin, housing, those major assets, as inflation becomes contained, they start moving down. Those assets will move lower. Eventually, interest rates will move lower, and that's probably a good time to start buying gold back again. For now, I'm shorting. If you're looking for this kind of content, make sure to hit the like and follow button. Also, I do write-ups on these on my Substack newsletter. There's a newsletter link down below to my Substack. Make sure to hit that. We'll see you in the next video.